Good afternoon. Good afternoon, traders. Welcome to Paul's Monday Market Update, number 217 for Monday, 9th of March, 2026. Great to be here. Hopefully, we will not have the tech problems that we had last week. Apologies again for that. I think that was just every man and his dog was on the internet that day, and for obvious reasons, which continue and give us a lot of the detail for today's session. Whether you're joining us live or whether you're watching the live stream, I hope that you can see the slides. Hope you can hear my voice. I hope that you are well and safe wherever you are joining and watching us from. The Monday market update is just that. It is me flying through as much as I can cover in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at some charts of interest to add to your watch list, and then a look at the live markets. It is not a signal service. There are no trade recommendations. It is just me sharing what I'm looking at, which may be of relevance or help and support to yourself. As always, you are very welcome here, but just remember you are always responsible for your own trading decisions. Also, if you want a little bit more help and support in your trading, regardless of how you trade or what you trade, the VTP Trader Accountability Group is up and running, helping people build discipline, accountability, and consistency in their trading. Okay. If you want more details, you can ping me, or once again, that QR code will take you to a page with more detail. Another stock which has kind of caught my eye, and we've talked about it before, cat or caterpillar. All right, so not surprisingly, okay, Caterpillar, they build all sorts, or rather, they build everything that helps build everything. Okay, they're heavily tied to global infrastructure, mining, expansions, etc. And as you can see that once again, that has been a fantastic chart. This is a bit of a what I would call a Munger setup. The Munger, basically, literally buying a bounce off the weekly 200 period moving average, worked really, really well for us on Caterpillar. But of course, what is interesting is that we can see that it was just running away. And as always, I say this to all kind of new traders and investors. Once price starts going vertical, once it starts going parabolic, if you are in the trade, you should tighten up your stops. If you are sat on the sidelines, stay sat on the sidelines. Don't chase it, because invariably, you're more likely to be the one buying the absolute top. Once price starts going vertical and starts really pulling away from the moving averages, it can't maintain that. Okay, and as we can see here, having worked our way up to sort of just tickling the soft underbelly of $800, over the last couple of weeks we have collapsed back down to about 680. Now, of course, if you've been buying over the last year, you're still well ahead, but I think this is it's a useful indicator of confidence in continued global growth and continued commodity demand. I would just be watching this, okay, because you would think, well, if there's a war going on, we need lots more Caterpillar trucks to basically rebuild, and that might well come into play. But at the moment, it is being used as a barometer for confidence in kind of global growth and commodities demand.